Still with us as well. It's time for cash tags. We're going to be talking some grocery stores. We're going to be talking Kroger. And ultimately here, Landon Swan will be joining us in just a moment. But let's talk some Kroger here. Jenny, when we're looking at this stock, it's eerily quiet here ahead of this report. We got the co-founder of LikeFolio.com with us now, Landon Swan. But Jenny, this stock is up a penny today. So it is waiting, whether it's for its earnings tomorrow morning, for some Fed action here. But right now, it is completely unchanged as we await some of this information.
Yes, and I have to say that from an analyst perspective, things are a little bit mixed because they are expecting a decline in the first quarter, which we'll report tomorrow morning on top and bottom line. But namely, this is because this company is really just facing really tough comps from last year when we saw this sort of pandemic, induced stockpiling with grocery stores. Now they are expecting, decent earnings, but just not comparable to last year's levels. And for some context, in the fourth quarter, which was last quarter, revenue expanded at a double-digit rate. So really the belief is they cannot continue expanding at these levels despite being a objectively healthy company. Now, what is interesting is the competition in this grocery segment remains pretty fierce, but there is this question of profitability with its stores, its supply chain, and also its e-commerce having to accommodate some of this extra volume we've seen over the last year. Plus, of course, now these inflationary measures weighing on the prices of grocery goods, with specifically beef. So that is something to keep in mind. Now, the market, what is interesting about Kroger is they're making significant advancements in their e-commerce as well as, their deliveries and their omni-channel presence. They actually just announced last week that they will be offering drone deliveries as sort of a pilot program in Ohio. So management actually said that this is part of their rapidly growing e-commerce and just part of their innovative, way of doing business now as a grocer. But what is interesting about social media today is not a lot of noise on Kroger with earnings specifically, but something I saw that caught my eye was this Warren Buffett's Berkshire Hathaway holding in Kroger, because typically, that is a sign of a healthy company. So that brings me to our first tweet of the day, which says, "This is an interesting part of the grocery industry's recent history that I was unaware of. Berkshire passed on Whole Foods before Amazon bought it. Berkshire now has a stake in Kroger, which I think fits their MO much better. Whole Foods has no infrastructure, farms, dairies, truck fleet, etc." So in the fourth quarter of 2020, Berkshire bought almost 19 million shares of Kroger, which put its stake at about 2.5%. Then a month ago, it increased its stake by about 50% by over 17 million shares. Now, this makes Berkshire the number 3 holder of Kroger, which I thought was, always interesting, because anytime Warren Buffett makes an investment in a company, we sort of pay attention. Now, our next tweeter today focuses on some of the factors that could be behind Berkshire upping their holding in Kroger. So our next tweet today says, "Overall, Kroger is a solid growth company with growing sales and a strong free cash flow. The company is safe as a long-term investment. Grocery stores will always be around, and because of the number of stores Kroger owns, it's safe to say this company is here to stay for a while." So what is interesting about all these different grocery companies, Landon, is that they all operate under the different private labels, and I believe theirs is Simple Truth. So I was curious to see how that stacks up against some of these other competitors. I think Walmart, I read, was one of their biggest competitors.
Yeah, so Walmart's got the Great Value brand. Target has the Good and Gather. And when we look at those three and kind of put them on the same chart, we can see pretty clearly that Kroger's doing okay as far as happiness, which means, people talking positively about the brand. But they're really lagging behind, as is Walmart, behind Target's Good and Gather, because they have increased their purchase intent, while as Walmart and Kroger have actually decreased theirs. So people are moving away from those brands and into Target. And I think it has to do with the overall happiness of Target being higher than Walmart. But then, of course, one of the things that we're seeing with Kroger is they've got a very strong delivery presence, but they cost a lot of money. It costs $10 per use, whereas if you're thinking about getting groceries delivered, which obviously was sparked huge over the last year, if you're getting groceries delivered by one of these other companies like Target or Walmart or even Amazon with their Whole Foods division, you've got an all-inclusive delivery membership, whereas with Kroger it costs $10 every time you use it. Now, they are testing an all-inclusive membership in Dallas and in Los Angeles. I think it's $80 a year, but it just doesn't compare when you think about the per use cost, and also the fact that if you're going to these stores online and you're thinking about getting other things, Kroger is just groceries. So a lot of people have discovered that they like shopping at Target online or Walmart online or Amazon/Whole Foods, and you can get so much more delivered to you. And so instead of just segmenting it out into, okay, I need my groceries, I'm going to go to this site, I need my other goods, I'm going to this site. It's sort of a one-stop online shop. And you can see in this chart that Kroger benefited tremendously from the lockdown. Everybody stocked up, and of course the comps are impossible for 2020. That's why we go back to 2019. You got a plus 9% on digital order mentions versus 2019. And that may sound like it's, kind of resuming that uptrend and everything's okay, sort of reverting back to the mean. But when you compare what grocery delivery is, just the overall trend of grocery delivery versus 2019, that's plus 74%. So Kroger is lagging behind the market tremendously, really far behind on digital delivery. And I think that it has to do with the fact that it's only groceries and it's $10 every single time. Whereas again, you're a subscriber to Target, Walmart, Amazon, you pay that once annual membership fee and you can get anything delivered. So they're a little bit of a competitive disadvantage right now. And I think long term that may cost them.
Landon, their year ending January 30th, they had a record of $132.5 billion in sales. That's a record for Kroger. So I think that what they've done in terms of getting more bodies in the seats. Remember, one great thing about this vaccination program that they were heavily involved in is more people going into your pharmacy, more people going into your grocery store. So I think they've done a great job with that. This is, when I think of Kroger and when I think of the lack of respect sometimes that I think this company gets, it's up there with Walmart in terms of the identity crisis. But all this company does, this is, in my opinion, this is the slow and steady wins the race. This is the tortoise in the world of grocery shopping. And they just move along and they do big things and they do them extremely well. I understand that there's sprinters out there, but Kroger looks like it is set up for more of the marathon than the sprint, Landon.
Yeah, I would agree. You know what? This company has executed very well over the last 10 years. I mean, there's been a movement, if you can kind of rewind in your brain back to when it wasn't all about healthy food and organic. I mean, they were very ahead of the game. They started an organic section that has grown and grown. I think a lot of stores are now like a third of the store are all organic. So they've done a great job on that. They got onto the delivery game. And so they're innovative. They're not really this dinosaur that lags behind the industry. They're innovative, but I think that one of the things that they're going to run into a lot of trouble with is their competitors are people that sell everything else. And so I think you're going to get a mind shift a shift in mindset where people, this last year have been buying everything online, and that included groceries for the first time for many people. And if they started buying things online, they're normally going to Target and Walmart, Amazon. That was there before. That behavior was there. But then you add in groceries, and you're saying, you know what, I can just go ahead and get groceries at Target. I can go ahead and get groceries at Walmart.com, whatever it may be. It's more difficult to say, well, I'm going to go to Kroger instead, Kroger.com, and add that extra step into your routine. So I think that is going to be a really tough hurdle for them to overcome. Now, they do have it's a great business. They do a fantastic job, but long term, I really think that's a tough thing for them to compete against, because I don't think that there's anyone saying that they're going to start offering all kinds of different merchandise and change their model completely. So they're always going to have this uphill battle of the one-stop shop of Target, Walmart, and Amazon versus groceries only at Kroger. Now, going to the store, I think they're executing extremely well, and they've converted people into delivery. But as people start to use those other websites, I think it's going to be tough for them.
First of all, Landon, I completely agree, because I think Whole Foods, it's like $35. You can get, it's free then for delivery. So it's hard to even, compare, because for someone like me that doesn't have a car, why wouldn't I always do that? But what I actually saw was their revenue growth on average on an annual basis is about 8.5%. And right now the sector's median is about 4.5%. So in terms of revenue growth, actually it's outperforming the sector as a whole. So I was curious what that typically means when there's that disparity, because you're seeing it actually underperforming its competitors.
Yeah, so when we talk about underperforming, really we're talking, the highlight that I was pointing out was the delivery, which I think is really the future of these companies. But if you're talking about in-store, they're doing a great job. And Kevin, to your point about sort of the stigma, I think that Walmart has the worst stigma as far as going in there and feeling like you're in a clean environment with other healthy people. So all that kind of thing is, I think that's Walmart's to own alone. And I think that Kroger has separated themselves. You can see on the happiness level here on this chart, Kroger and Target are much higher than Walmart. And I think that speaks to that stigma. So it's still a fantastic store to go into, and they're very innovative when it comes to getting on top of the trends, be it either organic or delivery. So I think that they are executing as well as they can as a grocery store. But again, my concern is the digital and the one-stop shop factor. Because they just don't have that capability. So we're a little bit, I would say, cautious on this one moving forward. And the fact that they're at basically 5-year highs on their stock price, when we put all of our data into our algorithm and spit out an earnings score, they come in at -29 out of a possible -100 to +100. So we're definitely leaning bearish on this upcoming earnings call. And the expectations, I think, are really high. The comps are impossible, but everybody knows that. I mean, everybody knows they're not going to put up 2020 numbers because it's just impossible. But even when you compare to 2019, it's just a little bit lackluster, especially in the forward-looking trends of digital delivery, digital shopping and delivery that I think are very important to analysts.
So Landon, as we sum things up here, kind of cautiously bearish, kind of more of a valuation kind of concern at this point than it maybe is. The data is just not strong enough to really get you excited about Kroger. But I mean, as a bonus takeaway from the other conversations we've had, it seems like Target is winning everything when it comes to these kind of big box stores. They're dominating the omni-channel front. They're dominating the grocery front. And we know that their focus on in-store has been crucial in the sense that they get more and more people excited about going back to shopping there. So I think that a lot of these stores can take something away from Target. But as a final takeaway here before we say goodbye, Landon, do you have any information on kind of the general behavior shifts? I know you guys are always watching these trends. Are more people buying groceries now post-pandemic than they were beforehand, or is it gone back to normal?
I think it's pretty much gone back to normal. In fact, it even could be down a little bit because a lot of the stocking up is still sort of in the pantry, or that behavior, just supplemented people's what they had just so much that we've seen that there was actually a drop off in that overall behavior. And, it's not just groceries. It goes across a lot of them. One of them that we saw interesting is Clorox and all the wipes and bleach. That was one that we've seen just that was a stock up and forget about it, and the sales have really gone away. But for groceries, obviously, it's you've got to renew that. But for some of the more some of the things that have a longer shelf life, the staples, that has actually gone down quite a bit. So I think that's still a sort of a lagging remnant of that wild 2020 that we saw. I mean, you can see it, the spike there in that chart. So overall, a little bit down. But I think in general, it's sort of resuming back to normal, but the staples are the things that we're seeing the decrease in.
Good stuff. Landon Swan, the co-founder of LikeFolio.com. Always a pleasure. Thanks for joining us here this morning.